Okay, hi everyone. Welcome back to the final part of the 2002 depreciation of fixed assets account. So the last part is to prepare the vehicles disposal account for the years 2000 and 2001. Now, the vehicles disposal account, just like in the revaluation question, disposal accounts only occur on the occasion that there is a disposal. Now, as it turns out, there is a disposal of a vehicle in the year 2000 and in the year 2001, so there will be a vehicle disposal account for both those years. And the important thing, I suppose, to differentiate the disposal accounts from our other ledger accounts is that we don't carry a disposal account on from one year to the next with a balance carried down at the end of the year and a balance brought down at the start of the next year. The account itself is opened when there's a disposal and closed immediately as well during that year. There's no balance moving from one year to the next. Okay, so let's get started. And in order to do this, I have the solution to the vehicles account and the depreciation account, or in other words, to the first two parts here, because we'll be taking some of the figures from the work that we've already done in order to construct the vehicle disposal accounts. So the first thing to do is vehicle disposal account. Okay, so it's a T account as normal. And what we would normally do, just like in the revaluation account, is the first thing we'd do for the first disposal, which was the year 2000, is we'd look at the year 2000 asset account and the year 2000 depreciation account, which in this case is the vehicles account and the depreciation account, and see if there were any entries titled disposal. And when we come across those entries, so for instance, this one here on the 1st of the 4th, 2000, disposal 78,000, then we take that entry and we bring it down to the opposite side of the disposal account with the same date, so 1st of the 4th, 00, and it's 78,000. But the entry that we put in here, well, the entry in the vehicle account referenced the disposal account. So the entry in the disposal account will reference the vehicle account. So we'll say here, vehicles. And sometimes in this question, they like to put in like the number of the vehicle that was disposed of at the time. So in this case, it was in the year 2000, vehicle number 3. Not necessary as such, vehicles will suffice. So that's the first thing. There were no other disposal entries in the year 2000 vehicle account. Now we look at the year 2000 provision for depreciation account, and again we see there is a disposal entry here on the 1st of the 4th, 00, 24,375. So what we do is we take that and we bring it to the disposal account, but we bring it to the opposite side. It's on the debit side here, so we put it on the credit side of the disposal account. So it was again the same date, 1st of the 4th, 00, the amount was 24,375, and the entry, as you've probably already guessed, is, well, since the entry in the depreciation account references the disposal account, then the entry in the disposal account will reference the depreciation account. So provision for depreciation or depreciation will do just fine. Oops, depreciation 24,375. Okay, so that's all of the information we can take from the vehicle account and the depreciation account. Now we look at the actual entry in the question and what it says. So it says in the 1st of the 4th, 2000, vehicle number 3 was crashed and traded in against a new vehicle costing 96,000. So that means that was the price tag on the new vehicle. The company received compensation to the value of 28,000. Okay, since there was a crash, the insurance company paid 28,000 to the company. And the check paid for the new vehicle was 57,000. So the price tag was 96, but the check paid was 57. So that means that the garage that they bought the new vehicle from gave them a trade-in allowance. In other words, they kept the old vehicle and they gave them a discount on the price of the new vehicle. So if the price tag was 96,000 as we see here, but the check that we wrote, or the business wrote, was 57. That means the discount was 96,000 minus 57,000. So let's look at that. 96,000 minus 57,000. 39,000 was the trade-in allowance, 39,000. So just like in the revaluation account, when we were talking about disposing of buildings, we always put a bank figure in here for however much we sold the building for. Well, in this case, we didn't sell the vehicle, but we did get something for the vehicle when we disposed of it. In fact, we got two things. First of all, we got money from the insurance company, 28,000. So we can put that in here as insurance or compensation. 28,000. And the other thing we got then was that trade-in allowance when we went to buy a new vehicle from the garage, and that allowance we worked out already is 39,000. And that's your trade-in allowance. So you didn't get cash when you disposed of the vehicle like we did in those revaluation accounts with the properties, but instead you got something else. So I guess you did get a little bit of cash. You got 28,000 from the insurance company, but you got 39,000 worth of a trade-in also. Okay, so when we've got that done, we tot up the biggest side again, and looking at this, 20, 40, 50, 2, oh yeah, this side is definitely going to be the bigger, so we're going to add up that side. So adding it up gives me 91375, and so we must have the same total on the other side. And if there's 78 here already, we need to put in something here that adds, brings the total up to 91375. So we're going to subtract 78,000 from 91375. And that gives us 13,375. So 13,375. Now, unlike all of our other ledger accounts, we don't call that figure a balancing figure, like a balance carried down. We do give it the date at the end of the year, though, 31st of the 12th. 00, but instead of a balance, we just call it profit and loss. Now, that profit and loss that we're saying there, that may represent a profit or a loss, and how we know whether it's a profit or a loss is if it ends up being on this side, the debit side, that balancing figure, then we know it was actually a profit on the disposal of that vehicle. If it ends up on this side, which it could also, it can end up on either side. I mean, this could have ended up being the bigger side, and so we might have had to put the profit and loss figure over here to make it balance. If it had ended up over here, then it would have been a loss. We'd have made a loss on the disposal of that vehicle. So that's the end of the first one there. Anyway, there's no balance brought forward or anything like that. That's the end of it. We can move on to the next one. And even though they're separate accounts for separate years, I'm not going to put in the title again, but they are certainly separate accounts. One isn't leading from figures from the last one. So the next thing is, let's start again with any figures from the vehicles account and for the provision for depreciation account. So for the year 2001 this time, there was a disposal, 82,000. So we're going to take that to the opposite side, to the debit side over here, 82,000. We're going to give it the same date. Where is it? 1st of the 8th, 01. We're going to call it vehicles because it came from the vehicles account. And I think it was vehicle number 1 this time. So we'll just put a 1 around that. Whoops. Vehicle number 1. Then the second thing we're going to take is any information about a disposal from the 2001 depreciation account, and there we see there's disposal 68675. So same date again, 1st of the 8th, 01, depreciation, because that's where we're getting this from this time. Depreciation, and what did we say it was? 68675. Okay, that's as much as we can get from these accounts. Now we go to the question again, look at the 2001 information. Vehicle number 1 was traded in for 12,000 against a new vehicle. So it was just a straight, brought it to the garage, it wasn't crashed or anything. They said, look, if you buy this new vehicle for 90,000, we'll leave you off 12,000. We'll give you a trade-in of 12,000 if you give us your old vehicle. So we got 12,000 when trading in that old vehicle. So whatever we get for the disposal goes in here. Trade in. Let's just see if there was any other information in case we miss anything. And trade in vehicle number 100 refrigeration units. So we already know all about that. That's fine. So that's all the information there is. Now we add up to see which is the bigger side. Now this time if we look at this, it's 68 and 12 comes to 80, 675, and that's 82. So this is going to be the smaller side this time. It means that we are going to have to put something in here to balance this account. And whatever we put in there will end up being a loss. It will mean that we made a loss on the disposal of this vehicle. So we know that the total on the bigger side here is 82,000. So the other side also has to have the same total. It's already got 68, 675, 68, 675 plus 12,000 coming to 8675. So take that away from 82,000. Gives me 1,325. And although we say profit and loss, it represents a loss because it's on this side. And that's it for the vehicle disposal account.